Hello, Mavericks. This is Rob Reinhold, and nice to have you here. Here we are going to go into currency ETFs. Now, every trader that comes aboard Maverick comes from a different background. We have some traders that have been trading for 20 or 30 years. We have some people that have traded actively for years in stocks and options, but this is their first time jumping into Forex. And then we have people that haven't done any trading before and have jumped into Forex. So I'm going to go over a lot of these things. If you have experience in trading and experience in the markets, a lot of this is going to be fairly remedial to you. But if you're fairly new to trading, I think this is going to actually help you as you start trading Forex. You are going to want to look at other markets eventually. I always tell people, look, start with one, get really, really good at trading Forex. And then you can go trade anything. Because I've always said, trading is trading. You are simply trading a symbol, and that symbol has a price, a market price. And that market price will go up or down based on supply and demand. Once you learn how to trade Forex, you can trade anything. Once you learn how to trade a stock, you can trade anything. The best analogy for me to give is that it's like driving. Once you know how to drive a car, and you've driven a car long enough to where you know you're good at it, every time you get in a different car, you still have the skills necessary. Now look, it might be a race car, but you're still going to have the necessary skills. So the great thing is, this is going to help you broaden your knowledge for when you do go in and trade other markets. You'll know how everything works. So let's start at the beginning. All right, exchange traded funds were started in 1990. Testing me here. I want to say 98. 1998. And what somebody did is before they created ETFs, if you wanted to buy the S&P 500, now again, the S&P 500 is 500 of the biggest stocks, and you couldn't buy that basket because the S&P 500 index, it's an index. You can't buy an index. It's not a thing. It's not a security. It's just a number that you watch. So the only way that you could get the same return as the S&P 500 is you either had to go out and buy all 500 stocks yourself, pay 500 commissions, and then make changes when they made changes, or you could give your money to an S&P 500 mutual fund. And they would do all that for you, but they would charge you 0.5% a year. Meaning that if the S&P made 10%, you made 9.5%. So you would never, ever actually get an above market return. You literally couldn't do it. In the 90s, some firms came along and said, wait, we have figured out ways to create stocks. And they created these things called exchange traded funds. And the very first one that was created was called the Spiders. It's the S&P 500 ETF. And what happens is the companies behind them. So I believe ProShares runs the Spiders. Well, I can't remember on that one. But anyway, they actually are buying and selling all of the stocks in the S&P 500 as that's going up and down. I've read all these articles about how they do it. I've looked into it. I am definitely not smart enough to understand how these companies run these ETFs, because just think of all the money going in and out of the market at all the time. They are literally buying and selling stock to match everything that's going on with all 500 of those stocks. Mind-blowing how they do it. So let's quickly take a look at just two charts here. On the left is the S&P 500 index. On the right is the SPY Spiders ETF. Now, as you can see here, the charts are literally the same. They're the same. The difference is an index is a basket. It's not a security. It's just something that someone put together and said, hey, look, you can look at this basket and see how everything's doing, but you can't buy it. Now, you can do derivatives off of an index. So there are options available on an index. So you could trade index options on the SPX. With an ETF, it is actually considered a stock, so it's a real security. So if you were to buy the SPY, you are literally buying 500 stocks. And if any of those stocks pay a dividend, you get it. And if it goes up 1%, you make 1%. And it's a stock, so it's just a simple commission, which commissions are almost gone at this point. I do think there's like a 0.08 yearly fee. If you hold on to the spiders for the year, you will pay a very, very small management fee. But the difference between the two, index or ETF, one you can buy, one you can't. So let's really quickly run down index. And I remember when I was a new trader and I heard this word indices, I remember thinking, I don't even know what that is. It's the plural of index. Now look, I didn't know it, and I felt dumb when I kept saying indexes, which I still think is correct. I still say indexes sometimes, but the proper thing is indices. So the plural of index is indices. So there are a few currency indices that we can look at and follow. So if we take a look at the notable ones, the biggest one is the dollar index. So you're going to even hear us talk about the dollar index. And we're going to take a look at the dollar index in just a second. There's also the Euro currency index, the Yen FX index, and the Latin America FX index. And remember, these indexes, they aren't securities. What someone has decided, they've just decided, hey, we're going to put a basket together. And somebody decided that they were going to do it based on how much volume there is in all of the currency crosses. So a huge part of the volume in the currency market is between the euro and the dollar. And so what they've done is they've said, okay, in this dollar index, 57.6% is the euro dollar. Whatever happens with the euro dollar is going to affect 57.6%. And then you can see that the pound and the yen are the other quarter. So what they've done is they've said, hey, this is how the dollar is doing against all the other currencies, all 6 of these other currencies. But really, when you really take a look at the components, it's really you're looking at it against the euro. And I mean, look at the CAD is 9%. It's not a real accurate way to look at how a currency is doing. What we greatly prefer, and you'll learn this in sessions after this, is we put together our own baskets where each one of these pie wedges is the exact same size as the other. That is the best way to look and see how strong is the dollar against 7 other currencies equally weighted. How strong is the Swiss franc against 7 other currencies equally weighted. So you're not going to hear us talk much about the dollar index just because we think it's a flawed way to look at a currency. We have a much better way, and we call them our currency baskets, and we're going to be teaching you how to put those together. But on the left here, you've got the Euro FX index, and on the right, I've got the Euro dollar cross. Now, they are inverse of each other. They are inverse, so really, if I put up the dollar/euro cross, it would be identical. Well, again, almost identical. You can see there's more gaps because indexes close overnight. So the fact that they're closed on a candle over here, you're going to see that one of these candles is going to close. And it never closes in Forex. It never closes in Forex. So let's see, that candle's right in somewhere in July here. Anyway, so these candles don't close in the Forex market because the Forex is open 24 hours a day. You will see them close over here on indices. So that's just a quick rundown on indices. We are not going to look at indices really at all because, as I said, we don't really love how they've put them together. We like to do them equally weighted. Let's get in next to the currency ETFs. So these same companies that made, the spiders and they made all these other ETFs, they've said, hey, we can make the same thing with currencies. So what they've done is they've created these exchange traded funds where you can actually get the same return. So just like with the S&P 500 goes up 1%, the spiders go up 1%. So they've created currency ETFs. Now here is a list, and I don't want to say this is all of them currently, but this is pretty close to all of them. There's just not a whole lot here. It's really easy to remember because they just start with FX. So the Australian dollar is the FXA. The British pound is the FXB. Canadian dollar FXC. You get the point until you get down to New Zealand, and then you look at it and you say, hey, why didn't New Zealand get its own currency ETF? They don't have it yet. It might be created at some point in the future, but as far as right now, it is not in existence. So if you were looking for a currency ETF against the Kiwi, it does not exist. Swiss franc, FXF. So super easy to remember those. You just put the first letter of the currency on the end of FX. And then we have the US dollar index. We just took a look at the dollar index. They've created an ETF that follows that. It's the UUP. As I said earlier, we're not going to use that index as a way to measure the strength of the dollar. Now what we really like the concept of looking at the dollar against a basket of other currencies to see how strong it is. But as you saw, we're really just looking at the euro against the dollar when we're looking at the dollar index. So we're going to show you a much better way to analyze the dollar against all the other currencies. On the right side here, we get into some pretty wild stuff. And for those of you that don't have any experience with ETFs, they have leveraged ETFs. So some of these will give you leverage returns. If you take a look at the Ultra Yen, this is going to give you 2 times the return of the yen. So if the yen goes up 1%, this one goes up 2%. The yen goes down 3%, this one goes down 6%. Now you can see they also have the ultra short yen. So YCS is literally the exact opposite of YCL. It's inverse. So if the yen goes down 3%, the YCS goes up 6%. Now, why did they create these? They created these for retirement accounts, for IRAs specifically. You cannot trade currencies in an IRA. You can't do anything with currencies. So people might want to trade currencies, and they also may want to use currency ETFs as a way to hedge some of their currency exposure in their IRAs. So these were really designed to be used in IRAs specifically. I like the bottom one, CROC, CROC. This is the Ultra Aussie Short. And then the other one I thought was fairly interesting here was the Chinese Yuan Fund. All right, now we can't trade the Chinese yuan. It's not a currency that's available to be traded because it's a closed system. Same with the Indian rupee. When I went to India, I learned that it was illegal to take any currency outside. Like if I was found with any rupees leaving the airport, I could have gotten in trouble. Now look, I took some home. Of course I took, but it was a meaningless amount. But they do not let the currency go outside, so you can't trade it. It's not a freely traded currency. And also in China, the Chinese government has pegged the value of the yuan to the US dollar. It's something that has caused a lot of contention over the years. A lot of people say it's unfair for them to do that. So this is kind of a strange currency. I imagine it was created for maybe people in China to be able to hedge out their own currency exposure. It's just not something that we can really use all that much. It should trade very similar to the dollar. All right, well, let's take a look at just how these ETFs look on a chart. So on the left, we have the FXE, and on the right, we have the Euro US dollar. All right, you can see it follows the same general trend, but it definitely looks different. Why is that? Because remember, these are stocks. So stocks, they don't trade all day long. So the Euro US dollar is going to trade all day, all night, all the way till Friday. And the FXE is going to trade when the markets are open. So again, that's why you have the same general movement, but choppy, because there's the gaps. There's gaps. There's, if you take a candle like, this candle right here, we can see it ran all day long in Forex, and when the market opened, it opened up and just stayed up here on that day. So again, the same general movement, but we're not getting 24 hours a day trading. Let's jump next to the Aussie, and you can see same thing with the Aussie, same general movement, but the candles aren't identical because the markets are closed. Now this is one that always trips me up, because when you take a look at the FXC, the Canadian dollar ETF, and you compare it to the dollar CAD, it's inverse. Because again, when we were looking at Aussie dollar, AUD, Aussie was the dominant currency and dollar was recessive. Well, in this one, the US is the dominant and the CAD is recessive. But you can see virtually just inverse of each other. Just inverse of each other. So again, you'll see that in the dollar Swiss franc as well. Those are the only ones that are going to kind of trip you up. And I just remember at first looking under saying, wait, I don't get what's going on here. Again, it's just because the dollar is dominant against the CAD and the Swiss franc. Okay, so let's talk about how they are why you even need to know about currency ETFs, how they're even useful. Obviously, we talked about the ability to trade currencies in an IRA and the ability to hedge out currencies if you have currency exposure in an IRA. That's one of the benefits. But this is the other benefit to you as a trader, and it's the options. So for those of you that have no options experience, this is going to go right over your head, which is fine because we all had to learn things at one point. I've been an options trader for 22 years now, 21 years now. I traded stocks for a few years before that. And it's a really cool thing to have analytics. And the options market is really great because it is all about math. If you like math, options analytics are awesome because all options is they're pricing out expectancy. And for any of you who have heard of a Monte Carlo simulation, this is what all casinos use to determine how much they're going to pay out in their games of chance. A Monte Carlo simulation is basically a computer runs a scenario. Let's take blackjack. And literally the computer runs hundreds of millions of hands of blackjack. And at the end of all those hands, it calculates all the odds of things happening. And it basically says with a high degree of confidence that we ran so many scenarios that we think that if this table plays, 100,000 hands of poker, 100,000 hands of blackjack over this year, we should get about the same odds of things happening. The options market is the exact same thing. It runs all the scenarios and it says these are the odds of it happening. So in the options world, whenever you start a trade, you know for a fact this trade has a 53% chance of being a profitable trade. You know that. Now again, this is all based on a stock in the exact situation, run simulations, what did it do 100,000 times, and then it says, hey, this is what typically happens in this situation. We don't have that in the spot FX market. Spot FX has no options, but the currency ETFs do have options. So we can actually go to these options and actually see what is the expected return, what is the expected movement. And so what you do here, and again, I just pulled up the FXY, which is the yen. And the rule is you take the at the money options. Now, at the money, for those of you that don't know, the currency is $90.66. You basically are going to pick the option that is closest to that price. That's called at the money. So right here are the options, strike prices that are available. And the 90/50 calls are trading for 30 by 45 cents on the bid. All right, so what we want to do is we want to take a look at both the calls and the puts. So if you go and you say, okay, what is the cost of the calls? Let me back up first. Options, they expire on certain days. So in this picture, this option is going to expire in 3 days. So this will give you all the odds of what is likely to happen in the next 3 days. So if we take the at the money calls, which I split the bid and the ask 30 by 45, I split that to 37. We take the $90.50 puts as well, split the bid and the ask 10 by 20 by 15. That basically gives me 52 cents. So when you add up those numbers, 52 cents is the expected movement of the FXY over the next 3 days. So if you take that 52 cents and basically you say, okay, 52 cents is likely to move up or down 52 cents over the next 3 days. That's what the options market is pricing in. So we just need to get a percentage return. So if we take 52 cents and divide it by the FXY, which was currently trading at $9.66, it's basically telling us the options market believes it's going to move in a range of 0.57% up and down over the next 3 days. So we can just simply take that math and times it, plus it and add it to the current price of the dollar yen, which is 104.19. And it's actually telling us, hey, the options market thinks that this is the highest and lowest it's going to go over the next 3 days. So as you can see, that gives you a little bit of help. Gives you a little bit of help picking out some targets, saying, hey, is this trade worth it? Is there volatility there? What does the options market think about the current volatility? So it's not something I use very often, but I know some traders do use that, especially when they're looking at some longer term trades they're looking at making. So again, just fun little things that you can do. I definitely wouldn't spend a ton of time analyzing these things, but currency ETFs, they are, again, some of the things they're helpful with is retirement accounts. IRAs, if you ever want to go long Aussie in an IRA, you now have a way to do it. If you want to go short the Aussie in an IRA, you can do it. Also, the options. Once you get into options more, there's definitely more that you can do than what I just kind of went through, showing you the at the money call and put. You can trade option strategies on currencies through these currency ETFs. So if you really like trading options and you say, hey, I'm already trading options and I really like the Aussie long here, you could go in and develop an option play on the Aussie in your stock and options accounts. And then again, we talked about how to use option analytics to determine some volatility. All right, well, that wraps up currency ETFs. Thanks for joining me. Take care, everyone.